Welcome to Forex Films. Today is Wednesday, October 19th, 2011, and we are looking at an 8-hour candle chart of the euro. And the major event of today is it appears that the USD correction lower is continuing. And you can see from this chart that the move already made it about almost halfway between the 50% Fibonacci retracement and the 61.8%. So our next level to look out for, as you can see, the 61.8% retracement at 1.40, but more likely than that, where you can see this 0.382, that is the where wave C of this correction would be equivalent to 0.618 times wave A, which is about 4120. And if we take a look back here, you can see that that is coming into heavy resistance from this previous corrective consolidative movement. So that remains a good target to watch for. The reason why we're currently looking higher is due to this movement. We, as many, had high hopes for this being a resumption of the downtrend. However, it looks pretty convincingly like it's in 3 waves and is likely to just have been a B wave correction. So let's move on to other pairs. Here is the Australian US dollar, and it's pretty troubling due to the fact that we already retraced pretty far past the 61.8% retracement, and we can't really expect a move of wave C to a normal target because it would come so close to invalidating the USD bullish movement, at least against the Australian dollar. So this pair we are cautiously optimistic. Dollar yen continues to consolidate. There's a lot of mixed feelings about this pair. The main feeling is just that it should pretty much be ignored. There's much better opportunities out there. Wait till these patterns clear up, wait till we get some movement, and then try trading this again. Pound US dollar. This is pretty easy. This is alternate count in my Elliott wave analysis if you've seen it on the website. Looking at 0.382 again, that's 1.5988, just below that 1.6 psychological area, and makes a very good target. Dollar Swiss. We were kind of troubled that this did not go down to the normal target here, about 0.6, high 0.85. But it makes sense now if that was a B wave movement, and we are ready to accelerate further down on this. And what makes it even more exciting is if we look at other Swiss crosses. You can see this was a pretty common triangle here. This was really needed to complete this previous wave pattern. But then we have 1, 2, 3, 4, A, B, C, D, E, and then we have the movement towards 1.25, which is another diagonal here, ending diagonal, and could take us all the way back down to almost 1.20, which means the euro will be falling much quicker than the Swiss franc temporarily. Then we have dollar CAD. This is also troubling like the Australian dollar because it's already retraced so much. So we can't really expect a normal target, but possibly 0.9950 with a break of parity or just below parity, somewhere in there would be a good target. I would like to buy this pair again, but I'm not going to start shorting again at these levels. Also, last but not least, the New Zealand US dollar. And this is another one that's pretty comfortable for looking for a target. We're looking at low 82s, 0.8232 would be the official fib target here. So good luck trading. Look for possible bull move through the end of the week, though I must caution that risk is still heavily to the downside for medium term and long term, so exercise caution. If this doesn't look like where it's heading for the rest of the day, then it'd be a good idea to get out, possibly even reverse positions on confirmation of renewed downtrend. Good luck trading.